Hi, it's Susanna from Her Money, Her Purpose, and I've got a question for you today. What is worse than paying tax? And the answer is forgetting to put money aside and scrambling to find money at tax time. So, this question is all about when you have a business or if you have income sources that are not having tax deducted on them automatically, like would happen when you have a job. And so you're responsible for keeping track of your income, your expenses, and your tax so that you can pay that. Now, I'm going to use an Australian example, so some of it might not be applicable if you're overseas, but I still encourage you to follow along because it may be of value to you anyway. This is really of value to people who have lack of clarity around how much money they owe in tax or how much money they will owe. And even if you think you might have a subconscious fear of earning more money because you know it's going to put you into higher tax brackets and you're afraid that you just won't be able to handle it. You know, mo money, mo problems. That's what we're trying to avoid. So before you completely tune out, if you haven't already, I want to show you something really important. What is it that I want to show you? It's my spreadsheet. So last week I did a money purpose workshop and we looked at a simple example, and this was around having a purpose for our money before we earn it, and certainly having a purpose for the money before we spend it. So in this simple example, the business had $5,000 in income, $500 in expenses, and therefore had a profit before tax of $4,500, and this was per month. And then I had this line item here where I said we want to take away and transfer to a tax account, to a separate account. Don't look at it, don't think about it. The tax. You want to just put it aside until later. And we used this amount of 20%, which may or may not actually be appropriate for you. So, what we want to do is we want to look at this and work out how much do we really need to put aside for tax. So if I just hide this column here, what I'm going to do is I'm going to multiply the income by 12 months in a year, and multiply the expenses by 12 so that we can then look at a profit for the whole year. Now, obviously, we're just estimating. Did you see what I did there? Those of you Excel experts following along at home, I made a little mistake. So, okay, so the profit before tax for the whole year is 54,000. Now we're going to use an example where the person doesn't have any other income. This is a sole proprietor who's, working for themselves. They're going to put all of this income and expense through their own individual tax. So it's a pretty simple example. As things get more complicated, yes, this simple example may not exactly work, but I want to get you started thinking about this concept anyway. So if they put aside 20% over the course of the year, they would have put aside 10,800 for tax. But is that the right amount? And this is where we can go into any kind of Google and just put in simple tax calculator. Now, because we're in Australia, we want to look at the Australian Taxation Office. That's our governing body who looks after our tax. So we click on the simple tax calculator. We select the most recent income year. I know it's not our current income year, but that's okay. It'll still give us a pretty good estimate. And we find 9,097 was the estimated tax on the taxable income. So I'm just going to put that figure here, paste it in. Ooh, that's a bigger font, isn't it? So what we find is we needed to pay that much. Sorry. Let's say we put aside that much. We needed to pay that much. That's okay. That's a good result because we saved too much. And You know, having more money is always a good result. More money than you expected is always a good result in my book. But what if we repeat this example? And I'm just gonna, what I'll do to make it easy for us is I'll just copy all of this and paste it down here. What happens if our income increases to $50,000 per month and our expenses increase to $6,000 per month? Once again, we need to make those columns bigger, don't we? So if we were doing this, we would also need to update our formulas. Times 12. Okay, so that in this case, what we're going to find is our profit before tax is $528,000. And if we were putting aside 20%, we would put aside $105,600. Okay, but how does that match up with what we may owe in tax? So again, going back to our simple trusty calculator, we're looking at the number of $528,000 in tax. 528,000, resident for the full year, submit. We find in this example that we would have needed to save to put aside more like $210,000. And again, ooh, we need more space for that. So we put aside $105,600. We needed to put aside $210,832. Not a good result. Exclamation mark, exclamation mark, exclamation mark. So the point I'm trying to illustrate here is as your income goes up, so does your marginal tax rate, and you may find that 20%, putting 20% aside just isn't going to cut it. But you are empowered with the information and a simple resource that can help you as your income goes up to have an idea of how much you need to put aside. And just because we like percentages, we started with the idea of percentages, let's look here. 9097 is coming up at around about 17%. And in this example, 210 is coming up at around about 40%. So clearly 20% just wouldn't cut it when our income is pushing this sort of a level. So I hope that is helpful for you. Feel free to send me a private message or email Susanna@hermoneyherpurpose.com if you want me to clarify this further. But otherwise, I just hope that you know that you are empowered with the information so you can go out and make lots of money. All the very, very best to you. Bye.